The story of Tellurian is one of excitement, massive disappointments, more excitement again, and what looks like maybe a lot of capitulation for a lot of investors at this point. So, what's next for Tellurian? What do investors need to know? And what should you be thinking? And what should you be thinking about doing next? I'm Jason Hall. This is Investing Unscripted. We're going to talk about what's going on with Tellurian and what investors may want to think about doing. Before that, though, just a reminder this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our special link. It's fool.com/unscripted. Go to that link and you can get access to the Motley Fool's 10 top stocks to buy right now, the Motley Fool's 10 best stocks to buy right now. Again, the link to get access to that special offer is fool.com/unscripted. Okay, so we're going to start here with this really brutal stock chart. And we can go even farther back. We can go back to the very beginning. Tellurian's stock that at one point was going up and then absolutely crashed brutally. Of course, this was during the pandemic before absolutely rallying to regain a lot of that lost value before a lot has been washed out again, putting us at about 90 cents a share. So, what's happened with Tellurian? What's going to happen next? What should investors think about doing? Before we get to the what investors should think about doing part, just a short version of what Tellurian is, how we got where we are, and what is on the table right now. So, Tellurian is a startup that's looking to build a liquefied natural gas export facility on the US Gulf Coast. Sharif Suki, one of its co founders, along with Martin Houston, who is currently running the show, founded the business based on their prior history and success building great businesses. Martin Houston with Shell being one of the leaders in Shell's natural gas business, and Sharif Suki, of course, the founder of Cheniere Energy, where he was actually pushed out by Carl Icahn, the famed activist investor. Now, Suki and Houston got together and said, let's do one better. Let's take the lessons we've both learned early in our career about these liquefied natural gas facilities, get the best we can, do it better, and make a lot of money along the way. Problem along the way ran into the pandemic, massive struggles getting any of the big global energy players to play along, to sign long-term contracts, to follow the strategy that Suki and Martin Houston wanted to follow. And eventually, that led us to a company where money was getting tight, the deals weren't coming in, and it was going to be hard to build a multi-billion-dollar LNG export facility. Things really came to a head back in late 2023 when Sharif Suki was pushed out of seemingly pushed out of his second LNG startup company, with Martin Houston, his co-founder, taking over as chairman of the board of directors, with Suki being pushed out as prior chairman, no longer holding any executive role or officer role with the company. Now, at the time, he was going to remain on the board of directors. Even that didn't last long. Within a matter of months, Suki was no longer even on the board as Tellurian began to try to pursue another strategy. Well, we found out what the outshoot of that change in strategy and refocusing was on July 21st, when it was announced that Tellurian was going to be acquired for $900 million by an Australian energy company called Woodside Energy Group. The payout, $1 a share, $1 a share, massively down from the price that many investors, including yours truly, paid to invest in what we were hoping was Sharif Suki's next big thing in liquefied natural gas. Now, we also have a letter from the company at the same time encouraging and recommending that shareholders vote to approve the deal for Tellurian to be acquired. So here we are today. It's mid-August. We're still letting the process play out. A lot of investors are seeing this 90 cents a share and thinking one of two things. Hey, there's a little bit of opportunity here. It looks like there might be some meat on the bone, an opportunity to play a little bit of what we call merger and acquisition arbitrage. What does that mean? That means you see a deal on the table to buy an asset for a price, but the market value that asset's trading for is a discount. So in this case, it's trading for, depending on the day, a 9 to 10% discount of the closing price of the deal. So I'm looking at the stock price in real time on August 12th, 90 cents a share. So that's an 11% profit that you can make if you buy at 90 cents a share and hold through the closing of that deal and get your $1 a share, get an extra 10 cents on top of the 90 cents that you invested. That's a pretty decent little return for a few months of your time. Is that something investors want to do? Frankly, that's where each investor has to make their own determination about the risks, the upside versus the downside before moving forward. What's the downside of doing this? The deal falling apart. This was a stock that was trading for 50 cents a share only a few months ago. If the Woodside deal doesn't complete, the stock price is almost certain to plummet. As a result, what seemed like found money could be losses that you absolutely didn't expect. I think any investor that decides they want to play a little bit of M&A arbitrage on this Tellurian deal with Woodside needs to go into it with eyes wide open, that it's still no sure thing, even though I feel like it's probably a pretty high probability that this deal gets done. What about investors that already own shares? Should you hold to get that extra 10 cents, or is it time to move on? There's a couple of different factors that come into play that you may want to consider. I have a very small holding in Tellurian now. Certainly used to be bigger, but it's quite small now. I'm going to let the process play out. I think there is a very small possibility that we may see a higher bid from another competitive buyer that's looking to get their hands on this already FERC approved deal. Some of the initial infrastructure and groundbreaking construction activity has happened. There's a lot of things that are lined up to make this a really appealing opportunity to acquire and build some really important liquefied natural gas export in one of the best markets in the world with access to low cost natural gas. So it's possible that we see that. I think the probability is low, but I think the probability is higher that a deal gets done, probably the one that we already have on the table, than the deal falling apart. What about investors that own shares that are ready to move on? I think it's a real simple calculus here. If you see another opportunity out there to invest that capital, the proceeds that you'd get from selling your Tellurian shares, and you're ready to move now and move on, I think that's a perfectly reasonable decision to make. Depends on your capital that you have available, whether you're ready to move on completely, how important it is to see this through. What if you're a shareholder now? Should you think about selling? I think there's a couple of reasons that selling may make sense. Number one, if you have an idea for redeploying that capital right now that you're ready to invest in, and you don't have other capital and you don't have other cash that you want to invest, it's a perfectly reasonable to sell right now. Just acknowledge that you are leaving some money, potential money on the table, assuming that this deal happens. You have to be ready. But if you have another opportunity out there to invest and you're ready to put that capital to work, a lot of worse decisions you can make than just go ahead and moving on from Tellurian, make that investment right now and move forward.